Hello and welcome to Business Incorporated, live from Channels Television headquarters in Lagos. I am Bolaji Akinwale. It's the Friday edition of the program. Coming up, the decision of the European Central Bank on quantitative easing leads to market rallies. Also on the program, the International Energy Agency says the worst is yet to come from the oil markets despite low prices. And we'll be bringing you updates from the FMDQ OTC Securities Exchange later on the program. Okay, we will begin with the British Chamber of Commerce, which said that it has downgraded its growth forecast for the UK economy, blaming global headwinds and uncertainty. It now expects the UK's economy to grow by 2.2% this year, down from a previous estimate of 2.5%. The BCC also cut its growth forecast for 2017 to 2.3% from 2.5% and expects growth of 2.4% in 2018. It also said that the downgrade was due to weaker growth in most areas of the economy, reflecting the global slowdown. The business body said it expected services and consumer spending to continue driving the UK economy. And millions of low-income households could see power bills cut after a watchdog report into the UK's energy sector. The Competition and Markets Authority, CMA, has proposed a price cap for all households using prepayment meters. It also proposed that the regulator, Ofgem, keeps a database of customers that have been on a standard rates for 3 years. This database will then be opened up so that the customers can be targeted directly by other suppliers. The proposals are designed to reform the energy markets and increase competition to help consumers save money. The CMA also proposed ending the restriction on suppliers to offer just 4 tariffs, strengthening the ability of price comparison services to help consumers find the best deal, among other recommendations. Now, they follow an 18-month investigation into the energy markets by the group, which found that in total, customers may have been paying about over £1, or rather £1.7 billion a year, more than they would in a competitive market. Let's now take a look at how the European markets have been doing so far. The equities markets were higher this morning, with investors cheering a rally in oil prices and digesting the aggressive easing measures the central bank, that's the European Central Bank, announced yesterday. Olaf Krieger is DWTV Channels TV correspondent, and he joins me from the Frankfurt Stock Exchange. Good afternoon, Olaf. Welcome to the program. Now, the day after Mario Draghi's ECB easing decisions, and the markets are in a frenzy across Europe, taking off from Asia. Any idea how long this rally will last?
Well, I'm afraid I have to say that rally won't last that long, because in principle it's not even more than just a rebound after heavy losses we saw yesterday after the ECB decision to cut interest rates to zero. First, traders and investors were really delighted about this decision, but later on shares are heavily in the red again. So I think this thing that the ECB is trying to tackle and to solve all the problems we see actually in the Eurozone is not the way to solve the problems, and investors are now in a especially good mood because of this rebound after heavy losses we saw yesterday.
Now, on a broader scale, how much of the latest ECB stimulus will flow into the Eurozone economy, and with what impacts?
Well, let's have a broader picture on this, a broader view on this picture, because the ECB's policy is to tackle the problems in the Eurozone, to make the Eurozone more stable. And what Mario Draghi did was cutting their interest rates to zero was first of all very disappointing for traders and investors, because the question is, what is next? More easing, more money, negative interest rates. So everyone is waiting what else kind of strategies he's going to present, and until now most traders and investors are quite uncertain that the measures of the ECB will really have an impact on the market in Frankfurt and all over Europe.
Okay, Olaf, just before I let you go, take us through the headlines for next week markets.
For me personally, it's more than crystal clear. It's the oil price, because the International Energy Agency pointed out that the oil price finally find its bottom line, and I just talked to a top analyst in commodities, and he totally agree. But there's a long way to go before supply and demand have a real balance, probably next year. So I think the oil price is going to be a big thing in the next week here in Frankfurt and all over Europe.
All right, thank you so much, Olaf Krieger, there from actually DW TV Channel TV correspondent, reporting live from the Frankfurt Stock Exchange. We do appreciate your time with us on the show. In fact, the oil price is a major story that I will be talking after the break, as we will look at what the International Energy Agency is saying about oil price level and the future of the oil market. That'll be coming up after the break. Please stay with us.